The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Technical Friday. It's the day that we do ChapmanWave notations and techniques in greater detail. Now, you know that I've been talking about, this has been going on for, wow, maybe since about the second week of September. What I've been talking about is the pattern that we saw in April and the pattern that we saw in July, where the tops were made, but it wasn't those inverted V-shaped top patterns that have like an uppercase A, I call it the Eiffel Tower, where it goes straight up and straight down. It was a rolling correction that eventually kicks in with a deeper slide. It's not telling you the proportion of the slide. Gosh, what happens to the throat? All right, there you are. It doesn't tell you the depth of the slide. It just tells you that at some point within X number of bars, the slow-moving average that we're looking at here in this case is the 14-period, the black line, and the faster-moving average, the 9-period exponential moving average, the green line, will cross negatively. And I'm going to try to see if I can find that chart. It just disappeared. I'm pulling a Larry Pesavento here. Let's see if I can find this one, daily. I think that's it. I actually think that that's there it is. We're on. And just like Larry gets these little ducks in order, I'm trying to do the same thing here. The E-mini, the ES December contract. Finally, look how the 9-period moving average has dipped. Yet the prices remain very nice in pretty good support around about the 29.50 level. But at the same time, because this is a daily chart, the look-back period is now taking in, on the shorter time frame, the 9-period differential, the look-back period is in fact closer to the price point. The 14-period moving average goes back 1, 2, 3, 4, exclude today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, to about where we were. So finally, you're getting the momentum of the indicators to the downside. And that means that if there's a deflection to the upside in this 9-period moving average, it could see the price still holding very nicely, not breaking down, and go a little longer. That would be unusual in the patterns that we followed. Let me just show you here, INDU. I need to get to all the different indexes, so let me just do this. Remember, these are right here. These are the sell signals that I had from my subscribers to my opening calls the day before the top, back in April of 23, April the 23rd. The Dow went to 26,695 the day before we had gone short. And then it pulled back, and there was even a bounce that went underneath that high. At the moment, it was an all-time high. Was it an all-time high? No, it was a high. And then pulled back. And even then, the MACD took 1, 2, 3, 4, 5 sessions before the price pulled back, and was only the 6th session where you got the formality of calling this a negative crossover. When we had the same thing happen at the top, here, this was the all-time high, 27,398, the day we went short to 27,003, right there, 92. What we're looking at here is it went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars. And then you got your red candle. And then you got with a close under for the first time, a close under the 14-period, the black line 14-period moving average. And then it tried to rally above. Scary. boom, intraday. It's had, you remember that day of the big reversal back on the 1st of August? Finally, the next day only, do you get the confirmation that there's been a crossover to the negative side. So from the time it started to the time you got your crossover confirmation, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, the 14th day, that was the first day, the doji candle, beautiful doji, tiny doji candle, reversal candle. So you can see it can take time. Same thing when we went to the upside. Remember, I missed the low. I was expecting the low. I said it's a dreaded H, lowercase h that goes to a lowercase m pattern, and that can be very difficult to get because you could gap up and then miss it because it's gone above the highs on the left side, the arch high, or it could go back down again. It's real tough. I said I'm probably going to miss it. I did miss it. We did have proxies for the rally. Not good enough. It wasn't along the Dow. We did have Dow stocks, but not the point. Missed that. And then we went short. Just missed it here the day after the little doji candle. So I had to wait. And then we finally got it at Dow 27,181, I believe was the actual price. That's not the vehicle we used. Now all we can do is wait. The MACD, if I go to the daily chart, am I going to do that? Yeah, I will. The MACD crossed negative. It's already, let me put this little circle right there. It's already crossed negative. Stochastic's way down 40%. No strength whatsoever. It means rallies should fail, but you never know, because there could be enough good news to break, and it would have to break this trend line. ChapmanWave falling X is a declining cone formation. This resistance here, 27,100. You need to see a move to the 20. You already need to see 27,200 to say, hey, now we're going to break to new all-time highs. I just don't see the reason for that right now, not in the chart formations, and I don't see it politically or in any other way other than, and you know, should I talk politics now? I want to talk about the politics of politics. No, I want to finish all this, and if I don't get to it today, there's plenty of time. It's just, I want to just explain what I'm looking at in terms of, I always rate the candidates in terms of the market. Some of you might remember way back with Bush, I called Bush, who was his opponent? A Dow stock, just a steady Dow stock. This is the second Bush. And I can't remember who the upstart was. And I called that the person, the NASDAQ. We were watching the two together anyway. So let's forget about that for now. Let's just go to this and say, within the context of the Dow, it's sitting right on the 14-period moving average, which was tremendous support, and now has become a tremendous kickoff for rallies, and now it's become the go-to trend line support. If that starts to fail, and by the end of the day today, especially when you're going into fund buying in the last few days of the month and the next few days of the next month, you know, something's wrong. All right, I can understand why it's wrong. I think many money managers are just a little hesitant to put money to work. Fine, that's okay. So now you've got that with the Dow. I can just make it real clear. A close in the Dow next week below 26,680. In other words, below 26,700, sets in place further lower lows and lower highs. The S&P, it's the same thing. The S&P number is a close below 29, let's make it 2948, would set in place the same thing. I'll be right back and we'll finish up, and I want to show you how these moving averages are really very important. I'll be back. Dow's up 20, S&P's down 3. Basil Chapman, Tiger Technician Zone.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So, technical analysis. We're looking at the S&P, not with the technicals declining. Let me put a little circle here so you can see what I mean. MACD turned negative, look at that. Stochastics way down 38%, and yet the price is holding very nicely. Today and Monday, probably going to Tuesday, are probably the most important sessions of this particular phase. And this is the reason why. I am completely wrong about the consolidation continuing if in the next 2 weeks there's an all-time high without any real buy signal being given. At the same time, if you look at the patterns that are forming, remember, I like to look at, let me see if I can just drag this across here. I like to look at the market, identify the lowest low bar and then merely count each successively higher peak. That's your obligation. And each peak, I absolutely mean each, even within the little ones. So here we go. Peak A, alphabetized. Peak B is the second high. Peak C is a higher high. And then peak D, the fourth high, is where other things can happen. We're looking at arch formations. I put it in red because if you take out the left side low, it's not very good. And I look at cup formations. If you take out the right side, the left side high and go even higher, that's good. You can get a combination of those: straight line, cup, or straight line going up, straight line down, red, and cup, an arch. I would call that an arch. Cup, that should be an arch, and going up is a cup. Very simple. I don't want to make it complicated at all. So here we are. We're looking at the S&P. Look at this large arch. Look at this cup formation, beautiful cup formation, and fails to go to a new high, 3020 instead of 3027 at a peak F, doji candle. We've got the same pattern here as we saw in the Dow back in July, the high there, so it's matching. And this one is making lower lows and lower highs in a very concerted fashion, and the MACD is negative. And here the stochastic is. Now we're going to go to our little pattern. Let's go right here back to the S&P. Oh, don't choose that. I must put that away completely. Now, let me explain what it is, first of all. This is, the black line is a monthly chart going way back to 2000. The black line is the Dow, the green line is Home Depot, and CTS, Cintas is the uniform company, is the red. And you can see that they're all the way to higher highs. The Dow just squeaked. And now we're going to see, is the same pattern forming some kind of a top? Is it going to be a top of consequences, or just a digestive phase, and you keep going higher? Within 3 weeks, 4 weeks, you're looking at new highs. Okay, so that's the S&P. You'll see cup, arch, cup, arch, cup, arch. And we've got another arch formation in the S&P. It's holding trendline support. Any close below 29.45, the 14-period moving average in the week, it would be very negative. And the resistance now is probably at about 3,026. That'll be an all-time high. No, let me just double check that. 3,027. So yeah, somewhere in the 3,022 area is the next trend line resistance. Okay, look at the QQQ. The QQQ, this is not good. This is making deeply lower lows and lower highs. The 194.71 was the last high, but 195.55 was the all-time high back in right there. That was the week of the 26th of July, and had a very sharp decline to the 179 level, big rally to 194.71. Now we're down to 186 low, tried to rally, and we're bounced to 188.22. But the MACD is negative, stochastic's negative, and now let's take our chart. Hopefully this is the one. There we go, please, yes. And we'll look at the QQQ in greater detail. Aha! Today there's a crossover. That means on Monday, there'll be a confirmation if Monday there's still a close below the 14-period moving average. And at 188.19, it is being impacted by the SMHs. The SMH is the semiconductor ETF, market vectors ETF, and it is still, it hasn't closed negative and has held. This is about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is a 12th session since the high that was made, all-time high, 120. Oh, it just missed the all-time high, 123.13, and it was 123.35 or something was the previous all-time high. So you've got a lot of double tops in place. A lot of the technicals are saying we need time. We don't necessarily need price, but we definitely need time to reorganize, to be able to get some leadership. We don't really have leadership right now. You can't call the defensive stocks like a Procter & Gamble. Well, they are leaders. Technically, they are the leaders. P&G, let me go there quickly. I mentioned it. Look at that. Beautiful move up to 124.21. Yesterday was a high. I believe it was all-time high. And the MACD, so I keep saying the MACD is the 9-period differential, is way below at 123. It's at 124.21 right now. And the 122.20 is the 14-period. So it hasn't even come back close to it. All right, let's go back to our story of the QQQs. So the QQQs are showing lack of leadership. You really want the Qs to be leading. That's kind of what they've been doing for years and years. When they start to fail, puts a drag on the general market. And the SMHs holding okay in the daily chart. But the Micron, I'm really quite impressed with the SMHs, considering Micron is down almost 10%, down 468 and 43.92. And LRCX is, what is that? Lam Research had its biggest down day, down 11. Whoa, I should do this. I just want to show this first of all without any notations, just these two moving averages. It's right on the 14-period moving average, having not been there since it broke above August of the 28th, when it was at 297. It hit 244 just yesterday. Lam Research LRCX, down 11 at 231. Applied Materials, down 190 at 50.25. Little doji candle yesterday was the clue that maybe today, after yesterday's earnings, could be a dip, and it is pulling back. Intel was holding okay when I last looked at it. It's now down only 2 cents at 50.90. It's a big weighting in the SMHs, and I think that's the reason why we don't have a deeper decline. So I'm trying to put the package together to say, just be careful here. I'm not saying we have to crash or anything like that. It's a process. It's a process of a rolling correction. as long as you got a rolling correction, you don't have the correction that you had in December where from the October highs, you got smashed to the downside. 92% of all stocks, I think, must have been hurt badly. This is different. You've got a Home Depot doing well. You've got a Cisco doing badly in the Dow. I mean, this is the kind of mix you've got. Okay, so now Intel is holding quite nicely. I'm trying to think. Oh, Xilinx. Xilinx is in there. X. It has broken down, but today it's not doing too much. But it's not a good chart in the daily. It's way underneath all the moving averages, and it's gapped down, and it's had 3 days to rally, and it's failed. And I just thought of the other one, ADI, which I haven't looked at for a little while. ADI is actually down 63 cents today at 112.51. So when you think about it, the SMHs are actually holding pretty darn well. All right. So let's go back here. We've got the SMHs. And now I want to go to the IWM. The IWM, lower lows, lower highs, lower lows, lower highs. It's just showing no strength at all. I'll be back. Dow's down 10, S&P's down 8. Basil Chapman, Tiger Ignitions Hour. I'll go to the charts that I was asked to look at. And I still haven't quite got my TFNN email right. I'll have it by early next week.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. I'm sorry I had it already, but I was so busy with my analysis I forgot to see. Scott, are you still there? Oh, Scott. And David dropped. Nah. I'm sorry, guys. If you want to call back, I'll still take you if you have a chance. I know Scott wanted to talk about X. I just didn't see it because I was so busy with all this stuff going on. Scott, I know that you had mentioned that you liked steel because it's not going out of business. It's a really good stock, and that you had got in I don't know if you took anything off at that particular point, but you had a gain when we were looking at it. And then the next day it just gapped down, and then it gapped down, not just gapped down, it plunged from the 11s down to the low of 1017. Scott, you there?
Yes, I'm here, Basil. I got in last week with another I had the 10,000, at the 1105 area, and then got back in last week when it came down. I got in.
No, Scott.
60 range.
Scott,
Go ahead.
Scott, it didn't come down. It gapped down. Huge.
Right.
So
Right.
you took the same
I went in with
attitude.
another 5,000, and long and the short of it, when it came back Monday, I sold out, and everybody thought I was crazy, but went up to 1150. I got out at 1140 and made $8,000. So I did it again somehow, and it was too easy, and it was almost like it was doing it just for me.
But Scott, one of the reasons is that was your plan. You remember you got in at a pretty decent point on its low, just off its low, so that when it rallied, it was looking good. So the gap down on, was it 4 days ago? Was that Monday? Yeah, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. Yeah, Monday. As it started to come back, that's where you said, aha, this is where it's going to come back, right?
Yes, and that's when I went in with another 5,000, so I had a total of 15, and I never dreamed it would go that quickly back to 1150, and that's why it was, got to 1142. I think I cashed out, and it was amazing, and believe me, I give back because I've been so fortunate, and I really believe that there's some sort of karma because I give and able to give so much back now that
that's very nice.
It's just amazing, Basil. I'm no genius. I mean, you and Tom know a zillion times more than I do about the market. But someone told me one time, maybe it's your naivete that helps you, because sometimes if you know too much, then you get apprehensive.
Absolutely. Some of us went through the October 19th 1987 crash, and I had taken profits the week before because I thought, wow, I don't like what's going on. I had just started my mutual fund news. It was actually an online call-in daily. I gave I think it was 9:15 in the morning. I gave a synopsis on the phone. They would call in, and I really thought that things were not looking good at all. So I took money off, but my NASDAQ, we used to call it over-the-counter stocks, had still good gains. So I said, you know what, I'm going to take a little off, but I'm going to leave some on because, I mean, it's already Thursday. We've got Friday. I've got a cycle low coming in on Monday. I'm fine. I've taken real good profits, and now I've got a little bit left over. And those stocks that I held through Monday got cut in half. That's what happened. So so we sit with that on our shoulders, that we've been through this type of thing before, in 2008, 2009. But I agree that in a way, it's not the naivete. It's just that if you don't have a lot of baggage hanging over you, just as memory, that's all it is, it's memory, then it makes it a little easier because you don't know. It's like, you know how little kids, they're learning to walk, and they're walking and they're going straight to the corner of the table, and your heart just stops, and they just somehow turn and they miss it, and then they go straight for something and they just turn, they miss it, they have no clue what they missed. So in a way, I think that you're right, but at the same time, I love the fact that you had a plan. I remember the people in the den saying, oh my goodness, on Monday, what happened to Scott? And I said, you know what? Scott will handle the trade. He had already a profit. I'm sure he's going to handle the trade. And that's exactly what you did. I like that, Scott. Congratulations. And let me know when you're into the next thing, because you did very well. And in fact, USX is acting very well, considering there's a whole China thing going on. It should really, there must be business going on that's very important to United States Steel, because it isn't acting well, but it's just not breaking down. So I'm really watching this for later in the year, because I think that US Steel is a stock that can go back into the 15s and 18s at some point. I don't know if it's ready to do it now, but at some stage it should. Hey, congratulations, Scott. I got a caller waiting, so I'm going to let you go. But thank you for letting me know.
Yep. Bye. Thank you.
Thank you. So, David's gone. Let me see what David wants to know. I'm sorry, David. It was my fault. I was busy. There was nobody there on the line. And the next thing I knew was, let's see, David in Fort Lauderdale wants to look at GC. So gold, I'll do this, David, if you're still around. Maybe, sometimes people are in between at work or it's lunchtime or whatever. They try to get a quick call in. I'm sorry, I would have taken your call right away. I just didn't see it. I'm going to go to gold, and I did a whole thing on gold for my subscribers the other day. It was on the GDX with the gold miners. But I've already done something. I'm going to be interviewed a little later today for something that'll be broadcast tomorrow. So I was preparing for it. So the gold is down 10 at 15.05. There's a pattern that I've been talking about, and it's this big box. It's like a rectangle. And as long as gold, my conclusion was, when I saw gold down sharply today, that what's going on at this particular point is in a sense, a financial war between other countries and us, and it's based on the trade. But at the same time, if gold had spiraled today up about $15 to $22, I would have said, this is much more meaningful as not just a trade war, but some kind of conflict going on that makes gold a currency of fear. The fact that it's down and it's stuck, I'm just going to take this away for the moment. I just wanted to show you it's stuck in the range that I drew ages ago. I said, there's the bigger box, the bigger rectangle, and here's a smaller rectangle. So I'm just going to check to see and say, Scott is back. David, no, David hasn't been able to call back. Sorry, David. So, David, I'm looking. I don't know your position. It's better that way. But I'm just going to make it real easy for both me and my subscribers, because we didn't miss. I was going to buy the IAU, which is the 1/10th price of the GLD for gold, and I just didn't do that because my focus was on the dollar. Gold is a spectacular move. I think it's in a digestive phase, and if you look at the GDX, I'll do it because it's a little easier to look at you see the GDX gap down today. You see the pattern that I always talk about. Remember the lowercase h pattern right there? On the right, there it is. You come down sharply, and then you make an arch formation. If you take out the left side low, you've got to be careful. For a while now, I've been saying the 26 is my key support in gold. Oh, that's a break already. I would like to, a couple of people have asked me, I got an email as well about the GDX, so it coincides with David's question about the GC, the gold contract. I'll be back and we'll talk about it, because this is an important moment to look at both the dollar, gold, and the euro. I'll be back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking at the GDX, but I just want to do this while we're looking at the chart. Where was it? Mr. Bill in the Den asked a question. I won't be able to find it. Basically, he asked the question about the bar side. See the width of the bars? He had said it looks like the red bars are much thicker than the green bars. Is that some kind of is that a clue to some kind of a technique? Yeah, it's a clue to the technique that if you look at the red bars, the steepness of the red bars and the number of them in comparison to the green bars tells you the amount of selling that's going on. But to tell you the truth, to answer your question, the size is exactly the same. It looks that way in the chart that you were looking at because look how deep the red bars are and look how few the green bars are. And these ones, they do look, don't they look, the red does look thicker. Oh, I know what it is. They don't have an outline in it. Okay, there should be a little black outline in the green bars, and there's not. I can't explain. It's got nothing to do with just the way it came out. But the reason why I was going to explain to you why it is because in the chart that you were looking at, there were so many green bars, and the red bars were very ugly bars. But there's a beautiful green bars as well, and they're not thick. I can't explain it. It's just, I'm sorry, unexplainable question. Good question. I would have said the same thing. Hey, is that a kind of a formula? I wish it was. It ain't. Okay, so now what we're looking at is there's a gap down today, and we've got gap down to the 2757 level. And you might recall that I've been saying that in the patterns that I'm following, I believe that the GDX should test the 26s, and that's going to be absolutely imperative that it holds. And it also says on the upside, because of the move, especially the move today, it says on the upside there's a limit that I can see just for now. It's not because of the monthly chart. Let me just show you the monthly chart. Let me do that. And I'm going to expand the monthly chart. Now, this is the monthly chart. I'm opening the whole thing up. You can see it. This is the monthly chart of the GDX. It made a double top at about in the 66s, way back in 2011, 2012, the U-shaped pattern that eventually turns into the ChapmanWave drop bucket formation, and it goes tumbling down, come down, down, down. You see the arch formations that fail to the left side, dreaded H, dreaded H, dreaded H. And then what do? You get one huge cup. I'm going to call it a bowl because it's longer and shallower than you would think of a cup. So it's more like a bowl formation. And it goes from about the decline in 2013 to the low of 1240, and it goes right back to the 31 level in August of 2016. Then it pulls back sharply only to the 17 level, and it makes a shallower but also kind of a deep bowl formation. And it rallies to the 30.96 underneath the 31.57, 31.87, 200-period exponential moving average, that orange line. So this is different to the gold contract. Look what happened to the gold contract. And this is a continuous contract, so the price changes. The chart pattern never changes. The dates never change. Just the numbers get smoothed out in terms of the relationship to it being a continuous contract. And they have to use, it's called the gold continuous contract December. So when they roll it over, obviously it gets smoothed out, the price gets changed by a couple of points, and it will change. But everything else is the same. But you see, it went way over the 14, 13-ish high that was made back in 2018, that January period. Then it pulled back to the 1200-ish area, and then ran all the way up to the latest high of, was it 1554 or something? 1566. 1566, which is way high. So the chart patterns are a little bit different. I like to use the GDX because it's really, these are the futures trade overnight, they're trading all the time. So in a way, they're much more accurate. But for practical purposes, the GDX is what people can trade. So I'm going to go back to the GDX. So let me just do this. Gold, as far as I'm concerned, is in a consolidation phase. It's in its second cup formation. If it starts to take out the low of 1490.70 that was made, this is a continuous contract, the low that was made on the 18th of September in the daily chart, this W formation in the MACD could extend lower, and the stochastic's very weak at 49%. It could go down to the 32% area or even lower. So I think that gold is in a the upside was well nourished. It kept going high. Then you got silver joining it. You had the gold stocks, got GDX, everything was working for it. Now I think it's a consolidation phase. So all I can say is underneath a close in the 1486 or lower area says gold is probably going to test the 14-period moving average of the weekly chart of 1476. It will take some real bad news, some spectacular something or other to get it back into the 1550s. That's the way I'm looking at it. We've got a break coming up, I think. And let me check. Break coming up, break coming up. No, we don't have a break coming up. All right, silence is because there is no break coming up. Oh, what a day. Kind of confusing. Okay, so let's go back to the GDX. And I don't think we've had our call back yet. No. Sorry, David. Hope you can listen to this. So the upside is 28.27 resistance at the 14 and 9-period moving averages. They're very close together right now for the GDX. But I have to tell you, I think that it's going to come down. And the fact that it's coming down with the market is the down, now down. Yep. Dow's down 40. I'm going to take this moment to say I wouldn't be buying gold, the gold stocks, not yet. I do think the monthly chart is in a peak C. And that says to me, if there is a pullback, where would you buy and why would you buy, and what is happening geopolitically that would make you buy? I missed the big move up. Apologize about that. We had other nice gainers. But I was going to buy the DZZ 2 times short. Now I thought, I don't want this for my subscribers, an overnight risk. Now I'm going to quickly look at AIG. It's one of the calls I got yesterday late, and I wasn't able to look at it. AIG is that American International Group. It's the kind of, I can't remember what kind of insurance they do, trading at 56.04, up 16 cents. I'm going to just say, Sandy, give me a call next week, or just text me next week. Not Monday, maybe Tuesday or Wednesday. But if it starts to trade in the 55s, it's at 56.04 right now. If it starts to trade in the 55.30 area, let's look at it together. Because the MACD came down, stochastic's very weak. It went to a peak C doji. Everything about it looks like a peak D. It's acting like a peak D, but it was a peak C. But under a previous all-time high, that can happen. So I am looking at it and saying, yes, I think you've got your eyes in a sector that could actually hold or rally under these market conditions. So let's look at it again. I'm just saying to you, I would not buy it just yet, because even if it pops up, it looks like one more time to test at least the low of yesterday, 55, 54. I don't think you're going to be missing out too much on the upside. Let's see on the downside where it starts to stabilize for a couple of bars, and then we'll look at it again. Why? Because it's testing. It's going up and down, below and above the 200 period weekly 56, 54 level. And I think it's at a peak E. If it goes higher than this, if it can actually rally to the 59.80s, it's at 56 right now. That would suggest that that's a brand new buy mode, and it's going to be one of those sectors we look at as an alternative to what's going on in the market. I'll be right back. A break's coming up. And thanks, I'm getting a little help here. Yeah, I'm looking at everything. Before I was distracted because I was so busy looking at my 9-period exponential moving average and 14-period moving up, so I did it again, wrong chart. I'll be right back. Basil Chapman, Dow's down, 36.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge heard here at TFNN.com.
Hi, everyone. Basil Chapman, and I'm looking at a Dow that's down 50, S&P's down 14. This is the exact action I say that for subscribers. This is what we need to see. And when it suddenly went up 120 points, I thought, gee, what? This is residual strength. How do they do that? Anyway, I'm not able to get to a whole bunch of emails I just finally got here. I'm sorry about that. I will not be here on Monday. Nice present for us. A school friend of my wife's lives overseas, and she and her husband are going to be coming to Massachusetts to visit just for the day. So we plan that we're going to meet them out there in Gloucester, Mass. And so I will not be here, but just keep this in mind. The moving averages for me are very important. I've got Cintas right here. The all-time high was 270.36. I couldn't tell you how many charts have made this pattern where they've run back to within cents of the all-time high. 270.11 is the high today after the earnings report. Good earnings report, but that was history. What's going to happen next? Next week, we'll be following Cintas very closely. We don't have a position in Cintas, but it's worth watching. That's number one. Number two is, within the context of the markets, the IAI, I'm a little worried about it. We are long it, but look, it's at 64.70. It's a very low volume. You've got to be very careful with it, but we have it for a particular reason. And look at this. It's not doing all that well, but it's not doing all that badly. This is the broker-dealer index. I'll talk about it more next week. Let's keep an eye on this because it's going to tell us quite a bit about the market between Cintas, the IAI, and certain one or two other sectors, and certainly the SMHs. Where are they now? The semiconductors. They're now down 2.14 at 118.49. Remember, we did go short for subscribers the other day in 120 area, so we're watching this very closely. I'm not looking at this as a major crash to the downside, not yet anything. I just want to see it go under 116, and then it'll say to me, good positioning. Now we can handle the trade in a different way. If it gets there, you never know. So have a wonderful weekend. Happy New Year to Jewish listeners coming up over the weekend. And if happy, healthy year, and it's good. We get two chances in the year to have a new year. So have a wonderful weekend. Stay tuned for Steve, Dave, and Tom O'Brien. Check out my opening call, my daily newsletter, and we'll see you on Tuesday. Have a wonderful weekend. Yes, my Monday report will go out. Thanks for being here.